Hope everybody is doing well. As always, if there's any issue with the audio, just make a comment. And with that said, let's begin. So, overall, we have had obviously what was an outside down day and bear trend. Daily chart, we tested above July 19th and we ended up went higher than I thought we would. But here you go. The market sold off pretty aggressively. So, this is everybody concluding that the market is probably going to test down to the moving average. Let me just check one thing while we're looking at this. Okay, there we go. So probably over the this is a big enough surprise bar. We'll probably get at least a small second leg down at a minimum. So far, good bar for the bears. Are traders going to sell the close? I don't know if they'll sell the close, but I suspect there will be traders selling and scaling in. So there's probably sellers 50% of the bar. Weekly chart, starting to get disappointment on the weekly chart. Let me just strong rally, but then overlapping bars, buy climax, follow through, but starting to get consecutive buy climaxes. So I suspect we're going to start going sideways here soon. This was probably just some kind of buy vacuum. And look to the left. No surprise. We are testing the low of March. It's the week of April the 1st. But either way, the low of this bar is 4629.5, 4633.5. So we went about 4 points above it and turned down. So we're at resistance, an area where traders got trapped. And I suspect we're probably going to go sideways in that area and probably pull back soon. First bar of the day, we gapped up, and the bulls, they tried to get a measured move, but it was too far to the upside. We're gapping up above the July 19th high. Follow through on bar one, so the market's accepting the follow through. Better to wait for consecutive bull bars, though. Bar two, an inside bar. Probably sellers above, buyers below, breakout mode, not clearly always in long. We gapped up, so it might be always in long, but it's not all that clear. Three, another inside bar, so breakout mode. And then four, we broke below three, but probably going to go sideways. Five, another inside bar. And then six, we broke to the downside and turned up. For the bulls, micro double bottom, or double bottom with one, and a wedge bottom, 2, 4, and 6. But probably going to go sideways in here. For the bears, it's a 5-bar bear micro channel since here. But I suspect we're probably, while there might be sellers above, we're probably in a tight trading range. 7, we now have 3 consecutive bear bars. So the bears are starting to develop more selling pressure. And you can see there were so many bears trying to sell above 6 that we could not trigger the buy above it. 8, we're breaking out to the downside. So the bears, they have a breakout below 1, breakout below 6 or 7. Strong enough bar, probably going to go at least a little bit lower. If you do sell the close, betting that it's always in short, bears will do that, betting on a test of the moving average, maybe the July 19th high. If they do sell the close here, they probably get out above a bull bar. Bear bar, but it's follow through, minimum follow through for the bears selling. So it's arguably sell the close and always in short, but you have to wonder, big tail on 8, big tail on 9, probably going to pull back fairly soon. And then a bull bar on 10. We triggered the buy above 9, but after all of these consecutive bear bars in a micro channel, probably sellers above. And then 10, we triggered this buy. We triggered the sell below 10 on 11, probably buyers below, low one short, and I suspect we'll go more sideways. But the sell off down is strong enough, we'll probably go at least a little bit lower. Surprise bar on 12, strong enough bar that we're probably going to go lower, but it's a possible wedge 1, 9, 12. So this might be more of a buy the close bar than a sell the close bar. However, any buy is probably limited, and this is likely going to convert into a trading range. 13, bull bar. Are there buyers above or sellers above? You can get out of shorts above 13, but it's a pretty tough buy. Tight bear channel, open gaps, high of 10, low of 1, low of 9, high of 13. Probably sideways here. And then 14, we have a follow through bar, consecutive bull bars. Is it by the close? I don't think so. It's strong enough consecutive bull bars that we're probably going to get at least a small second leg up, but it's really not all that clear. And then 15, we have a doji. For the bulls, it's a pause, and they expect a second leg up after 13 and 14. For the bears, they see 15 as a pause, and if we go above 15, that will be the second leg, the second leg of the two-legged pullback. So there might be more sellers above 15 than buyers, and that's what happened on 16. What about buying below 16, betting on a micro channel since 13? It may not be all that ideal. We had a tight bear channel, possible small pullback, bear trend. This is damaging for the bears, but it's two legs up. So you could argue you might have more traders selling up here than buying. And that's in part what happened on this bar right here. 17, bear bar, but a test of the 12 low. Probably buyers not far below. And you can see that's why there's a tail here. However, these bulls who bought this low might be disappointed with the bear bar, with the bear breakout on 17. So we could get another follow through bar, which we got on 18. What about sell the close on 18? It's consecutive bear bars and there's a tail below. But I think part of the problem with selling the close of 18 is I'm just wanting to check something on my computer for a second. Part of the problem with selling the close of 18 is its consecutive sell climaxes. We're still trending down, but there's less momentum to the downside. The bears, if you think about it, the bears were selling here, lots of bear bars in a row. Right here, we're plunging down and pulling back, and that's probably due to traders stepping aside. Bulls, they expect the market's going to test the moving average, so they step aside and it reaches it. The bears, they sell aggressively until we get there. Big bar, follow through bar. We're breaking below 12, but we sold off and reversed up. We'll probably get to the July 19th high, but we're testing yesterday's high right here. And it's possible this is just a sell vacuum test of yesterday's high or the July 19th high. Inside bar on 19, probably buyers below. However, it's a 3-bar micro channel, and 17 and 18 might be enough of a surprise that we get a second leg down. 20, bear bar closing on its low. You can sell below it, but again, if you're selling at the bottom of the channel after consecutive sell climaxes. If you do take the short, you get out above a bull bar. 21, doji, a lot of traders that sold here. If they did take the sell, some of them would probably scalp out, betting that this bar 19, is a disappointment bar. Therefore, it's probably going to allow the bulls that buy the 19 low and more lower to make money. So you will have some traders buying below 19 and buying 2 points or 4 points below 19. And you'll have bears selling below 19. let me back up. You'll have bears selling below 19 and scalping out 2 to 4 points lower. And that's in part, that also corresponds with the July 19th high, this blue line. 22, bull bar, I would get out of shorts above. Aggressive bulls will buy. We had a reasonable buy on the 13 at the 13 high following the parabolic wedge 1, 9, and 12. So you will have traders buying above, betting that we test the 13 high right here. 23 consecutive bull bars. Is it by the close? I don't think so. The bulls need to do more. They need to break above the moving average. And ultimately, they need at least 2 or 3 consecutive bull bars. 24, another bull bar in a micro channel, but the bodies are getting smaller. That's a sign of weakness by the bulls. And then 25, surprise bull bar. But micro channel, and we're testing into this area, so we may pull back fairly soon. And then we have an inside bar on the next bar. So tight bull channel, yes, but this looks more like a leg in a trading range than the start of a strong trend. In other words, this rally is probably going to lead to a leg in a trading range. 27, surprise bar, probably going at least a little bit lower, but trading range. So if you're selling here, where do you think the bottom is? It's probably somewhere not much lower. So the downside's probably limited. But 27 is a big enough bar that the upside's probably limited as well. 28, consecutive bear bars, possible double bottom with 21, test of the low close, 21 or 20. So probably going to go sideways here. 29, an inside bar. Some traders, they bought the close at 27, hoping that the market would rally, and instead it went lower. So what are they going to do? A lot of those traders bought more lower, and they're trying to get out break even back at the 27 close. So a break even on their first entry with a profit on their second. 28 is also a low one short, and we triggered it on 30 and reversed up. 30, double bottom, 2 legs down, or second leg down after the 27 and 28 bear breakout. Always in. Bears probably exit above 30. Bulls can consider buying. Good follow through 31, probably going higher. Good follow through buying 32, probably going higher. And 33, we broke above 27 and pulled back, but it's still a bull bar. So the bulls, they're getting open gaps. That's all good. But 33 is a warning that something is not quite right for the bulls. Still, after 30, 31, and 32, probably going to try and get at least some kind of measure move up. In May, we may get all the way back to the high of bar 15. 34, outside down, but top of a trading range, probably buyers below 34. However, the pullback could be deep. It could be all the way back to the midpoint down here. Bull bar on 35, closing on its high. Are we always in long? I think so, but always in long and probably converting into a trading range. So if you're buying up here, you probably need a wide stop. 36, another bull bar. Always in long, but possible second leg up after the rally from 30 to 33. So reasonable to exit below any bear bar. Doji on 37, and then another bar on 38, and then 39, we have a bear bar. So we have a second entry short. It's kind of implied. We broke to the upside on 36, paused on 37, 38 and 39, we have a bear bar. Probably, are there buyers or sellers below? There's probably buyers below 39, but a lot of the bulls who bought on the way up will be disappointed by any pullback. And because of that, they may be pretty quick to exit. 40, a bull bar, and then 41, breaking out to the downside. 41 is enough of a surprise If you're a bull and you bought anywhere 38, 39, or 40 and scaled in lower, what are you going to do? You're probably going to be interested in exiting around the high close. And that's what happened on 42 and 43. 43 testing the high of the high close 38 and turning down. It's also trapping any of the bulls who bought above 42. They bought high in a trading range and late in the rally that began on bar 30. Always in bulls, they can get out below they can get out below 43 for a few reasons. One, it's a bear bar closing when it's low. You can make the argument that it's at the bottom of a tight trading range and it's a bad sell. But if you really look at the bar, this should be it right here. Let me just 1205. Here you go. When you look at that bar, that's 1205. Do you want to buy the close of that bar? Of course not. It's reversing a lot of bars to the left, and that's the follow through. So obviously, lots of traders got trapped. Whenever you see that situation where you get a bear bar and then you get a really strong follow through bar, you're going to get a second leg. And because of that, the market went down so fast, a lot of traders started buying back shorts and bulls started buying aggressively, but those bulls are scalping. They know the sell off is big enough for a second leg. 45, bad stop entry buy, but bad stop entry sell below. But it's a 50% pullback from the prior bar 44. So still, while there's probably buyers below and will go more sideways, it's a low one short and a 50% pullback after a surprise bar, bar 44. 46, bear bar closing on its low, followed through 47. Is it sell to close? It probably is sell to close. Strong enough bear bar and then another surprise with follow through. Although we may test the breakout point on bar 21, this is still reasonably strong. Let me just fix something. There we go. This is still reasonably strong, so probably sell to close, but it's certainly okay to take partial profits at this point. And then 48, we have another strong bear bar. Is it sell to close? It's sell to close, but stop is getting far away. Some traders, when they're taking these trades, really the way you look at it is if you're short, you can get out above a bull bar. You can get out a scalp distance above a bull bar. So in other words, you can get out above any bar that closes on its low. So if you have a bear bar, you can get out 1 point above. Probably better to get out 2 points above the bar since the bars are a little bit bigger. And then if you get a bull bar, you get out above the bull bar. And some traders will get out 2 points above the bull bar. So you have some traders selling and they're just trailing a stop. Another bar, another bar. A bull bar. And some traders still get out on a stop 1 tick above. But look what happened. Even the traders that put their stop 1 tick above 1245, bar 51, it never triggered the buy and it just continued lower. We triggered that buy, but do you really want to buy above 54? Probably not. And the bulls who bought above 54 couldn't even make a 1 point scalp. So the bulls are not yet strong enough. So it's sell to close through here. You have a bigger bar closing on its low 150. So you will have some profit taking, overlapping bars here. So some traders buying below bars. But this sell off is so strong, you're going to get a second leg. And because of that, traders are swing trading. Surprise on 56, probably going at least a little bit lower, and then a bigger bar on 57. Possible sell climax and exhaustion on 57, but 56 and 57 look equally as strong as 46, 47, or 48. And that makes it a little problematic for bulls buying above 57. But okay to exit above the bulls buying above 58. Okay to exit above 58 and wait to sell again below bear bar. And unfortunately, if you did that, you would probably have to sell again below the next bar. Surprise bar 60, probably going at least a little bit lower. another follow through bar. And the bulls that are still long, they probably get out above any bar. And 63 is that bar. Sell climax, sell climax, sell climax. Probably not going all that much lower. 63, bear bar or bull bar, 64, low one short. Probably buyers below, but this is almost free falling at this point, and it can be dangerous to be buying below bars. You need a pretty wide stop. And that's why if you bought here, a lot of traders, they probably would not get out at the low of 62. And that's why most traders would use some sort of stop, like a measured move down of this range. But either way, probably buyers below. And then for the bulls, some bears took profits at the 62 close. That's why we bounced, but we ended up going lower. So some bulls, they buy the low of 64, they see 65, and they think, that's disappointing. I wanted the market to go straight up. I didn't want it to go down. And because of that, you had some bulls just bailing out of the trade, which is in part why we sold off on 66. 67, bull bar, but we may get a small second leg down after 66. And we sold off on 68 and reversed up. Traders should definitely get out of shorts above 68. 69, surprise, but then disappointment on 70. And then you can see what happened. 71, those bulls giving up. Double top, 64 and 70. Surprise bar, probably going at least a little bit lower. 72, hesitation. So big bear bar. Momentum's good for the bears. And then it dries up on 72. That's a sign of trading range price action. But what about the bulls who bought the 70 low and more lower? They're trapped, and that's why 73 went outside down. 4 consecutive bear bars on 73, with all of them closing, 3 of them closing below their midpoints, 1 closing maybe at the midpoint, which is bar 70, probably going at least a little bit lower. And you can see the bears went much lower than anticipated. And they may have gotten a measured move. No, they didn't. They didn't quite get a measured move. And then we rallied back into the close. So tomorrow, I suspect we're probably, after all this consecutive sell climaxes, we're probably going to get sideways trading for at least the first couple hours starting tomorrow. So probably 75% chance of a trading range lasting 2 hours. 25% chance we get a trend day up or down. 50% chance the market will get initial follow through selling on the open, but still 75% chance of 2 hours sideways, 2 hours of sideways trading beginning before the end of the second hour. Stop entries, probably the first credible stop entry. It's really tough through here. Maybe if you're brave, you sell below 7, but other than that, some bulls will buy above 13, but they know the reversal up's minor. So I suspect a lot of those bulls are getting out below 16. If you're buying a minor reversal, you want it to be perfect. You want a bull bar and then a strong follow through bar and then another strong follow through bar. You don't want this dojis, which are signs of momentum weakening. And I thought it made sense. You can buy above 22, wedge bottom, 2 legs down. Probably okay to buy above 22. But then, what do you do with that? That's pretty tough. 22 was a sensible buy because you had a sensible buy on 13. You had a buy that made a lot of sense. It was a wedge bottom, although it was parabolic. So 60% chance if a bull buys above here and more above a bull bar, it's going to come back to their entry price. But still, probably a minor reversal. The bulls that bought, they probably get out here. Probably okay to buy above 30. Double bottom at support. The July 19th high and the high of yesterday. And maybe you sell below 43, but tough to do. And then somewhere in here, it's just sell the close. You just have to sell. As Al says, pinch your nose, sell. You pinch your nose, as Al says, you jump off the high dive and you just sell something. And really, really tough to stay short all the way down. But obviously, you had some traders doing that. And that's probably it for stop entries. Limit orders. limit orders on the open, and the bulls buying below bars, buying below 5, 6 or 7. They got trapped on 6 or 7 with 8. So first reversal up should fail. So bears selling above 9, probably buyers below. But I suspect a lot of those bulls would rather buy closer to the moving average or support, which would be the moving average, which is why 12, the market reversed up after the close of 12. 19, probably buyers below, but we could test all the way down to the July 19th high. Plus, with 17 and 18, you'll probably get a second leg. So 19 is pretty tough to buy. Probably buyers below 29, buyers below 33, sellers above 42. But tough to buy with a bull bar, tough to sell with a bull bar closing on its high. Sellers probably above 50, but you're selling a 1, 2, 3, 4, 5, 6, 7, 8 bar bear micro channel. So that's not easy as well. And then it was really, I mean, you're basically selling closes here. Some traders, they see a big bar like 60 or 68. Excuse me, they see a big bar like 60, so they sell at the midpoint, 50% pullback. And that's probably it for limit orders. For buy the close, sell the close, I thought it was sell the close on 8 or 9 for a second leg. I thought 12 was more of a buy the close bar for a test of the midpoint. It's probably more exhaustive than a clear sell the close bar. Maybe sell the close 18, but tough to do. You can buy the close of, I thought buy the close was more clear on 31, 32, betting on a second leg. You can sell the close of 44, but also tough to do after the big tail on 44. Other traders, they sell the close of 46, 47, and it was really sell the close all the way down. So you could sell the close of all of these bars. You could probably sell the close of 51, betting that we're worst case going to go sideways and not straight up. You could sell the close here on 56, 57. It's probably a more difficult sell the close bar. It's a big bar and it's more likely exhaustion. And exhaustion typically leads to 1 to 3 bars of sideways trading, which obviously that's what happened on 58 and 59. And that's probably it for sell the close. Maybe you sell the close of 60, but I think that's pretty tough. This is pretty these moves are so rare that I think it's okay to almost ignore them. They're not all that frequent. This is, you can call it, and it's due to higher time frames. So everybody deciding that that the July 19th high is failing and the market's racing down to support. So everyone on the daily chart's deciding that we're going to test down to the moving average. Someone asked about the 21 low and how how could buyers avoid being run over? Well, when you get a big surprise like this, it can be more dangerous to buy. There should have been buyers below. But at some point, when you see this bar or this bar, you've got to conclude that that theory is wrong. All right. So that's all the time I've got. I will be talking in the trading room tomorrow. So if you have questions, feel free to ask them there. And we will see everybody soon. But tomorrow, I would expect 75% chance of 2 hours of sideways trading on the open, 50% chance of follow through selling on the open as well. But I'll write that in the pre market tomorrow. All right. Thanks everyone for watching and hope everyone has a good rest of their day.